There is a signal in the gold market right now that matters more than any headline, more than any price move, more than anything the people on the financial channels are pointing at. And the strange part is how quiet it is. It did not arrive with a siren. There was no breaking news banner, no anchor raising his voice. It came in slowly, one careful decision at a time, made by the most informed, most cautious, most risk averse buyers who exist anywhere on this earth. And when they finished, something had changed that had not changed in a lifetime. If you have money in a retirement account right now, if you have spent 30 or 40 years building something you are supposed to be able to lean on, this is the signal you were never meant to notice, because the people who watch it for a living have already acted on it. And I want to walk you through exactly what they saw, what they did about it, and why almost nobody is telling you the real story. Not the surface headline, the mechanism underneath it. So let me give you the concrete thing first, before I earn any more of your patience. Here it is. Gold has quietly moved past a threshold it has not crossed since the world ran on a very different set of rules. When you line up every reserve asset that central banks hold to protect their nations, gold is no longer somewhere down the list. It has climbed to become the second largest reserve asset on the planet, sitting behind only the United States dollar, and ahead of the currency that was built to rival the dollar. That did not happen in a single dramatic session. It happened ton by ton, vault by vault, over years, while the crowd was watching something else entirely. Now think about who did that. Central banks are not day traders. They are not chasing a hot tip. They move slowly, they move deliberately, and they move with the survival of entire economies riding on being right. These are the institutions that print the money, that set the rates, that see the plumbing of the whole financial system from the inside. And with all of that knowledge, when they had to decide where to store the value of their nations for the long haul, more and more of them chose the yellow metal. That is not noise. That is the most informed money on earth casting a vote. And they voted for gold. That is the signal in the title, not a squiggle on a chart, a structural shift in what the smartest, most patient money on the planet trusts. And here is why it should reach right into your kitchen, into your own statement, into the number at the bottom of your retirement account. Because when the people who understand paper money best start quietly trading their paper for metal, they are telling you something about the paper you are still holding. They are not saying it out loud. They would never. But their actions are louder than any speech. Let me stack up the evidence, because a claim like that has to be earned. The first pillar is the sheer pace of the buying. For 3 straight years, the world's central banks bought gold at a rate we had not seen in generations, taking in more than 1,000 tons a year, roughly double the pace of the decade before it. Think about what a ton of gold actually is. Not an ounce, not a coin, a ton. And then 1,000 of them in a year, and then again the next year, and then again. Even when the buying cooled from that blistering peak, it stayed far, far above anything that was normal in the 2 decades prior. This was not a blip. This was a change in behavior that held. The second pillar is why they started doing it with such urgency. And this is the part the financial media walks very carefully around. So let me say it plainly and without any politics. A few years ago, one large nation had its foreign currency reserves frozen by other countries in the space of a weekend. The money it thought it owned, the money it had parked in other people's currencies and other people's systems, simply stopped being usable. And every other central bank on Earth watched that happen and drew the same cold conclusion. Reserves you hold as somebody else's paper can be switched off. Gold sitting in your own vault, inside your own borders, cannot be frozen by anyone. It answers to no other country. And so the buying accelerated. That is the fear that is moving the most powerful institutions in the world, and they are acting on it right now. The third pillar is the one that should genuinely stop you, because it breaks a rule that held for a generation. For most of my career, gold had a simple relationship with interest rates. When real interest rates rose, when you could earn a solid return just holding safe government paper, gold tended to fall because gold pays you nothing. It just sits there. That inverse relationship was almost a law of nature. And in recent years, it broke. Rates stayed high, the kind of high that historically would have crushed gold, and gold climbed anyway. It climbed toward records while every old textbook said it should be sinking. Why? Because the buyer setting the price changed. It stopped being the trader chasing yield and became the central bank buying for survival. And that buyer does not care what a bond pays. When the rulebook stops working, it usually means the game underneath it changed. And it did. Now, let me bring this home to you, because this is the point where I have to stop and be honest about what is at stake for your money specifically. If the most informed institutions on Earth are quietly moving out of paper and into metal to protect themselves, the obvious question is what protects you? You do not have a national vault. You can't fly 1,000 tons of gold into your basement. And for most of my career, the honest answer for a retiree was that this door was mostly closed to you. That is no longer true. And this is the part they never make easy to find. There is a perfectly legal way for an ordinary American to do the exact same thing the central banks are doing inside the retirement account you already own. You can move a portion of an existing 401k or IRA into physical gold and silver, real metal, without it counting as a withdrawal, without triggering the taxes or the penalties that would normally come with touching that money. It is called a self-directed precious metals IRA, and it has been sitting in the tax code the whole time. And I want to be clear about who this is for, because the industry likes to make it sound like a club with a velvet rope. It is not just for insiders, and it is not just for the wealthy. If you have $100,000 or more sitting in any retirement account, this is squarely for you. We put together a free retirement protection guide that lays out exactly how it works, step by step in plain language. If you are watching this on your television, just scan the QR code on your screen. If you are on your phone or your computer, go to jeffreedguide.com. It is free, there is no obligation, and it explains the same move the biggest buyers on Earth are making, translated for a regular retirement account. Now, let me get right back to the story, because it gets more interesting from here. And I want you to feel how rare this really is, because the last time gold sat this high in the ranking of what the world trusts, the entire system was wired differently. There was a time, decades ago, when the world's currencies were tied to a gold-backed dollar by formal agreement, when the metal sat at the center of the whole arrangement by design. Then, over the course of a few years in the early 1970s, the United States closed the gold window, and that arrangement was abandoned, and gold was pushed to the margins of official thinking. It became the thing the modern, sophisticated central banker was supposed to have grown out of. For a generation, the fashionable wisdom was that gold was a relic, a barbarous holdover, a yellow rock that paid no interest and belonged to a past we had outgrown. Well, the most sophisticated central bankers alive have just quietly reversed that verdict with real money. The relic is back near the center. And they did it without a single press conference announcing it. Consider, too, how differently the metal behaves depending on whose hands it is passing through. There is an old truth in this market that the most metal changes hands at the very bottom, and it changes hands from need rather than from opinion. When a nation is in real crisis, its ordinary people surrender their gold because they have to, and that surrender tends to mark the low. When a government is desperate to look modern and raise a little cash, it sometimes sells its reserves at exactly the wrong moment, right at the bottom, and lives to regret it for decades. Gold flows out of weak hands under stress and into strong hands with patience. And what we are watching now is the opposite of a forced sale. This is patient, powerful, informed money, accumulating on purpose, with no gun to its head, choosing the metal freely. That is the strongest kind of buying there is, and it is the kind that tends to precede the long moves, not end them. Here is the part that actually changes things, and almost nobody on the mainstream channels will connect these dots for you. This reserve milestone is not just a fun piece of trivia. It is the visible tip of a much larger shift in how the world thinks about safety. For most of the last 50 years, the assumption was simple. The safest thing you could own was the debt of a strong government, because a government could always be trusted to make good on its paper. That assumption is quietly eroding, and the central banks moving into gold are the first to admit it with their wallets rather than their words. Look at the backdrop they are staring at. The world is carrying more debt than it ever has, layered on top of itself, in nation after nation. And the uncomfortable truth about that mountain of debt is that it makes it very hard for the people in charge to be as disciplined as they say they want to be, because tightening the screws too far risks breaking the very governments the system depends on. When an institution can see that trap coming, it does not wait for the crisis. It hedges quietly, ahead of time, while everything still looks calm. That is precisely what the gold buying is. It is a hedge against a problem that has not fully arrived, placed by the people who will see it first. And notice something about the current moment that makes this even sharper. This is not a story about easy money and reckless printing right now. The person running the Federal Reserve today has been anything but soft. Rates have been held firm, the committee has been split, and the tone has been about credibility and discipline, not about opening the floodgates. And yet, even against a Fed that is holding the line, gold has kept climbing. Sit with that for a second. The one thing that is supposed to knock gold down, a serious central bank refusing to blink, is present, and gold is rising anyway. That tells you the force lifting it is not coming from the Fed at all. It is coming from underneath, from the structural shift in who trusts what. And that is a far more durable force than any single rate decision. Now, let me be the honest voice in your ear, because that is the whole reason this channel exists, and it is what separates a real conversation from a sales pitch. None of this is a promise. I cannot tell you what gold will do next month or next year, and anyone who claims to can is not being straight with you. Gold moves in violent waves. We have seen years where a mere hint of tighter policy sent it lower for a while, and years where frightened sellers dumped it simply to raise cash, even as the deeper case kept quietly building underneath. Volatility is real. A shakeout can and will come. This is a case built on evidence and on the behavior of the most informed buyers on earth. It is not a guarantee, and it is not personal financial advice. I do not know your situation. I only know the pattern. But that honesty cuts the other way too, and here is why the pattern matters more than the next wiggle. Think about what a real top looks like. A top is a mania. A top is when your neighbor, your barber, and the fellow in line at the coffee shop are all suddenly experts, all crowding in, all certain. That is not what this is. Right now, the buying is being done by the quietest, most sophisticated hands in the world, and the public is largely not in the room yet. The most informed money has voted, and the crowd has not even read the ballot. That gap between what the insiders are doing and what the public knows is the entire opportunity, and it is also the entire warning. So let me talk about your own position for a moment, plainly, the way I would talk to my own family at the kitchen table. If any of this moves you to act, do it the boring way. Own the real thing, the metal itself, not a paper claim that promises you metal. Because in a true squeeze, the paper and the physical can behave like two completely different assets, and you want to be holding the one that cannot be diluted. Size it so that a sharp drop can never force your hand, so that you would never be the frightened seller dumping into a shakeout, because that seller is exactly who the trading desks feed on. And do not try to be a hero at the top or the bottom. This is a slow, structural story. Treat it like one. Because here is what I need you to really understand, and it is the heart of everything I have been building toward. You are early. I do not say that to flatter you. I say it because it is simply factually where we are. The smart money already sees this. The central banks already moved. The reserve milestone already happened, quietly, while the headlines were busy with other things. But the mainstream has not caught up. The pension funds are not there yet. The financial media is still treating this as a curiosity, a footnote, a chart to glance at and move past. The general public has no idea that the very definition of a safe reserve is shifting under their feet. And that is exactly the window that matters. Because by the time this is obvious to everyone, by the time it leads the evening news, by the time your neighbor is asking you about it, and every advisor in the country is finally recommending it, the easy part of the move will already be behind us. That is how it always works. The recognition comes last, and it comes to a crowd that is already too late. Nobody sends you an invitation to this. Nobody is going to call your house and tell you the reserve landscape just changed and you should pay attention. The people who could tell you have every reason to stay quiet, because your calm and your inaction are, frankly, profitable for someone. The invitation is the understanding itself, and you are holding it right now. So let me answer the question the title asked, directly and honestly, before I let you go. Did gold just flash its biggest signal of the year? Yes, but not the signal you would guess from the headlines, and not a price. The biggest signal is not what gold cost this week. It is that when you rank the reserve assets of the entire world, gold has climbed to second place, past a currency built to rival the dollar, put there deliberately by the most informed and most cautious money on earth. They looked at the paper and they quietly chose the metal. That is the vote. That is the signal. And it has already been cast, whether the crowd noticed or not. Which brings me to the last thing, and it is only for those of you who stayed with me all the way to here, because you are the ones who take this seriously. If you have $100,000 or more in a 401k or an IRA, we hold a free one-on-one educational web conference. It is not a sales call and it is not a pressure pitch. It is a genuine walkthrough of how a retiree can protect a portion of their savings the same structural way the central banks are protecting their nations, using the account you already have. If you are watching this on your television, simply scan the QR code on your screen. If you are on your phone or your computer, go to jeffreedguide.com. Mention that you watched this all the way through, and we will make sure you are looked after. And here is the honest reason to do it now rather than someday. It is not scarcity, and I will never insult you with a fake deadline. It is the opposite. The best moment to make a calm, careful, reversible decision is precisely when nothing feels urgent, when the panic has not started, when you still have the time to read, to think, to ask questions, and get real answers. That window is open right now, in the quiet, while the most informed money has already voted, and the crowd still has not looked up. The people who watch this for a living already acted. The only real question left is whether you understand what they saw before everyone else figures it out. You came here for a signal. You just got the one that actually matters. Now you know what to do with it.